you tired of all the uneducated noise you're getting from the droves of YOLO meme coin peddling douchebag gurus out there trying to use you as their exit liquidity? Would you rather learn a competent university level set of skills that will guide you in managing and investing for the rest of your life? Join us 3 days a week at Digital Investor. Develop your knowledge of game theory, cognitive bias, macroeconomics, monetary theory, investment theory, psychology of the crowds, and more. For more info on Digital Investor and how it can help you, reach out at nickblacknext.com.
Well, that's a good question. I don't think we're being gamed. I mean, that's very loose. You have to start defining what your version of gamed means and someone else's. If you're a game theorist, everything's a game. Not that you make it trivial, but that everything's treated like a game so you can, make the best decisions. So in that sense, yes, everything's gamed all the time. They're trying to manage the perception. They had outflow yesterday. For the first time, they actually had money leave, but everybody had money leave. Because is there anything that would make you think that the typical Wall Street investor has an appetite for more or less volatility? Because the only reason all of these people are getting into Bitcoin is because number go up. So when number go down for a few days, they all panic the same way. Matter of fact, they probably panic more because unlike people in the crypto space, they've never been bombarded with volatility. So they're even less equipped to deal with it. So they get in early mid-January, and they ride it up and they get nearly a double. And then they see things going the other way for 6 days straight, which is, remember, 6 days isn't 6 days. In the traditional investing world, 6 days is actually a week and a half, right? Because 5 trading days, 2 weekends. So everybody's on full panic mode. So they're like, I'm out. I want out. So they're going to get out, and then they'll watch it go back up, and then they'll wait until it's probably higher than where they exited, and they'll buy back in. And the same rookie, just because someone has a little bit more money and they have a retirement fund or a 401k or a pension, it doesn't mean, matter of fact, it means they may be less intelligent as far as investment theory. They probably have less. Why does Siri always wants to turn on? Sorry. Hush you. So they probably have less kind of financial education because they're just working some job and dumping their money in, or it's a programmatic. It's dumping money into some retirement vehicle. And so, I mean, I think Joe Sixpack's pretty stupid. I mean, most of the financial managers I've met are pretty stupid. So, so what do we think about their clients? So what do you think about the average person that's jumped in and joined these ETFs? Do you think that they're more or less intelligent? I mean, they're dummies mostly. All these people are dummies. That's why we have such a clear advantage investing against these people, because, I mean, most of them are dummies. The people managing money are dummies. That I wish it was different. Well, no, I don't. I'm glad it's this way. I guess I'm sad that there's such poor financial management just in general. There's just so few people that understand basic flipping math. But if there wasn't that huge chasm in intellect, then we wouldn't have this opportunity to continually pound them, right? So everybody can't win. So what is BlackRock doing specifically? I think they're just managing the perception of what's going on. They're not really gaming anything. There's nothing for them to game. You notice they haven't been bombarding the airwaves with advertisements. They were pretty quiet about it. And that probably was a decision, because they said, listen, if this thing doesn't work out, let's not be known for having been the ones that just, bombarded the airwaves like crypto.com with all these commercials and the Matt Damon and all this kind of crap. Like, let's just quietly, go. So I don't think they're gaming it, other than just trying to control the perception of the losses. That doesn't seem too bad to me. I think that's what anybody would do. They're also protecting their shareholders, right? They have to be confident fiduciaries. Any updates on Hypercycle that you can share? Not since yesterday, Charlene. No, not since Brandon and I talked yesterday. Nothing on the radar in the last 12 to 14 hours. But I'll get back with you in the next 6 hours and let you know if anything's changed. No. We're not keeping any secrets. And by the way, Charlene, if I did have an update, I wouldn't share it on today's show, because this is Thursday. This is office hours. We would share it behind the wall so that you guys have some benefit. And just share it to the people. These people don't deserve it. These people aren't ready for what we have to say. They can't handle the truth. Anyway, let me find let's see. There was another good one I saw. Where is it? That's not a good one, Jim. How do you change the picture next to your message? Well, that's not really a market related or crypto related or financial question. That's a user experience question. I think you just click on it. Anyway, when my hypercycle node begins to produce, I'm going to ... Yeah, that's a big ... You're gonna be able to do a lot of things with that ... Okay. Hypercycle license question. They're sending them out over time. I think we have to send out like over 60 master nodes worth of licenses. And it's just a very slow, because you have to do it. It's not just sending the licenses out. You guys, there's a lot to it. You have to go in and you have to split the master nodes down. Transaction. For those of you that ordered like a 2-node license bundle or an 8, you have to start at 512. Bink, 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 down. Every single one of those is a transaction. So a bunch of Ethereum transactions, and then you get your tokens. So yeah, it's a very long, tedious effort. So just be patient. You too shall have your licenses. Let's see. I did a survey of 10 people I know or met and asked them what is in their 401k. Yeah, I don't think people have any idea. You might as well ask them what's in a Russian sausage. And they're like, I don't know. Я не знаю. I eat it. Я ест. Я не знаю. Oh yeah, that's right. It could be Gmail thing. All right. This is why everyone should know. Listen to you. Well, yeah, I don't know. I don't know if. Oh, you know what? Listen, I've been doing so much better on my profanity. So don't keep sending me emails about profanity, or I'm going to profanity you back in the email. We wish you would get your language in order, just because of the younger audience. Ain't no younger audience. Listen, there shouldn't be a younger audience trying to learn about crypto investing. That is not a good idea. And there shouldn't be this is not for a young audience. So if I dropped F-bombs every 13 seconds, it would be equally as viable as not anything at all. Anyway. So F you. Let's see. The most licensed, I would assume people. Yeah. So Joseph, that's these questions. I want everybody to do this. There's 161 people here. I want everyone to write in the chat. I am going to say my question in my mind to myself first before I ask it out loud, and see if you get an answer, which many of you will. So there is, and we've talked about this a lot, there's no one reason why anything happens. There's no one reason why a number will go up or one reason why a number is going down. It doesn't work that way. There's a bunch of information. People weight information differently, and then they behave based on their risk tolerance and level of investment. That's it. So even when you say that question, and again, I'm not picking on you, Joseph, but seriously, if hypercycle is in such short supply, I know I added an is, why is the number going down? Well, you mean the price, so say it. Be precise about, if you have a question, first of all, be precise about the answer you're looking for. We need to not be so lazy and vague. If you want precise answers, you need to ask precise questions. In this case, this is a sloppy question in general. Not to pick on you, but this is just a sloppy question because it's very loose and imprecise. There is no answer for this question. So there's just too many working parts. It's like, why is the sun hot? Well, there's a lot going on, right? Where? Sun hot where? Here on my face, on Earth, in Los Angeles, or halfway towards the sun in the cold vacuum of space at near 0 Kelvin, negative 273 degrees Celsius, or at the surface of the sun? Man. All right. Hypercycle tokens are in short supply, but right now, the simple answer is people are less interested in it than they were. Because I think people were waiting to marry their tokens and, start compute. And originally compute was going to roll out in March. And the reason it hasn't rolled out, from what I understand, is that it's too complicated for regular people. They're doing all sorts of compute testing with big companies and things like that. But the average Joe, the average Joseph, and myself included, they hand you a bunch of tools that are incredibly complex. So, we kind of screamed about, the end user, the Joseph six-pack. How's Joseph six-pack going to actually use this? Because it's far too complex. It's fine if you're an AI scientist. It's easy if you're an AI scientist. But raise your hand if you're an AI scientist in the room. So to kind of decrease that complexity and make things a little bit more streamlined, a little bit more simple, they're re-engineering the plumbing, things like that. They're also working on the HyperPG website. And I would reiterate, they're still quite a bit ahead of schedule. Remember, none of this stuff was originally, if you look at the roadmap, none of this stuff was going to roll out until September. No, sorry. June, July, August, November. None of it, not even tilling. None of this stuff was ever going to roll out until around November. So we've been tilling since October. again, which is signaling to the network your uptime. Tilling is basically calling in for work and saying, hey, listen, I'm available. If you guys want me to come in, I'm available. You can call me. Call me. So that's what tilling is. And that's been happening for a while. And that establishes like the liveness, the heartbeat of the network, things like that. That's important. And it also gets you closer to your first splits or divisions or however you want to frame it in your mind, where your node breaks off into two nodes because it's achieved an overall score of 2. It starts at 1, and then they have, there's these qualities by which you can measure the performance, which is the tilling and the uptime, right? Because you create a reputational score. It starts at 1, and what's factored in is the uptime. What's factored in is the compute, like when you're actually doing compute transactions, things like that, the liveness of the network, and you'll have an overall score. And consistency of the work you're doing, the kind of equipment you're on, all of these things feed into a score. When that score goes from 1 to 2, that one node license goes bink and becomes 2. You choose, if you so choose it, which everyone you would imagine they would. So that being said, your one node license, which has 1,024 tokens, breaks into 2 licenses of 512 tokens. Then 6 to 18 months after that, and I say 6 to 18 months because 6 months is the fastest you could achieve that next 2 rating, and at 18 months would be about the longest it would take. And again, it's assuming that your crap is not unplugged for 8 hours a day. I mean, you're not going to get anywhere if you're unplugged. That's not, if grandma's on life support and you unplug her, that's not going to be good for grandma, is it? Like, oh, I just unplugged her for half the day. Well, grandma's dead. Plug her back in. No, it's too late for that. You're going to need a Ouija board for grandma. So why is the number going down? Because people are less enthusiastic about the token because it hasn't rolled out as fast as they want. They're not rich yet. And the thing about what's interesting about the token is the token, the actual price of the token in this case is not all that important. I mean, it is a measure of what's happening at the market level with sentiment as far as speculation. But you're going to be taking these tokens and wrapping them up in licenses, marrying them. And when you marry them, you're going to point them towards some technology, some hardware of some kind, perhaps your own. And that's how you start being performant. That's how you start participating in the internet of AI. And you get paid for that. And, so the token itself will leave circulation. I can tell you this right now, there is a potential deal on the table that would consume, I think it was close to 80 master nodes. So any of you math whizzes, do 80 times 524,288 tokens. It's a lot. So that's just one deal. Remember, so that's like 40 million tokens, something like that. So there's these deals that they put together with, facilities that have a bunch of servers and, what have you. They have all these kind of deals that they do that they're in various stages with. And so as those come online, they'll just hoover up a bunch of tokens. So you'll see all of a sudden, and it won't be like a slow, gradual, there just will not be hypercycle tokens to be had at Now, what would that do? That would unearth other sellers. Obviously, if there's no tokens available, like if I go over to Node Market and I look and say, what does it look like on Node Market? Let's go to, by the way, for those of you who don't know, you can just go to the search bar here. People are like, I don't know how to search for a token. I don't know. Maybe go to the one place on the screen where it says OTC token search. Crazy. I know. It's wacky. So then you go, okay, well, HYPC. Okay. Wow. It even says it. Look how easy that is. It's cray cray. So I'm seeing what's in the books right now. 56 cents up to about 67 cents. That's kind of the whole order book right now. So you think, okay, cool. But what happens if someone needs, this is what, 100,000 tokens maybe? maybe 150,000 tokens. When they're gone, like one person fills 1/4 of a master node, all that's gone. So think about someone filling 80 master nodes, 80. Where are those millions and millions and millions of tokens going to come from? Think they're going to be on a DEX? I don't know. Let's go look. Let's go to DEX tools.io. Yes, great. Yes, it's amazing. I had search. Oh, yeah. We don't want the WBNB, though. Hypercycle. Woohoo! Let's see where. Okay. Not a lot of liquidity. 1.5 million. Not so much. So, and what is the price? It's banging around, but it's about a 1 penny. But look at these. Look at all the stuff going on here. It's these are tiny. These are just tiny transactions. Ooh, 25,000 tokens. So it's at 33. That's a whale. Come on, man. Ain't nothing. So you start looking around here and you're like, gosh, it's just not a lot of tokens. Yeah. So if someone came in and pounded this thing and needed to buy, look, here's the circulating supply, 74 million. So if one entity came in to buy 40 million tokens, what do you think happens? 40 million tokens. There's only this whole circulating supply, 70. This is what they say. Again, but let's say it's a triple of that. But you look on exchanges, you're like, well, the tokens just aren't there. Yeah, because people are holding the tokens to marry with their licenses. They're going to marry them with their licenses, then they're going to park them, and they're going to just earn revenue. So these tokens is kind of a one-way gate. Yeah. And then, yeah, so that's the thing. So you really have to look past the right now. I mean, is anybody trying to get out of their investments right now after all of the many kind of year and a half of, I would say, aggregate bear market, because there were bull markets to be found. Obviously, AI was one, and data was one, things like that. But on the aggregate, is anybody now just ready to get out? They're like, I'm done. I'm ready. I'm getting out. I'm on my way out. So, I mean, maybe some of you, but probably not most of you. And on the hypercycle side, you just basically math it out, right? Like say, okay, I know that I'm going to put my tokens to work with licenses. I'm going to earn some revenue. If I'm earning revenue, does it really matter what the token's worth? You say, well, maybe it does. So I'm going to show you something else. As long as we're on this discussion. Crap. Give me just a second. Let me see if I can find. I had yeah. Let me put this up. This will make some sense. Okay, do you guys remember this? So what this was when the splits occur, based on the revenue that you're earning, again, meaning you don't have to do anything. This is just what the value of the token would be after each split based on the revenue that you're earning. And I'm making some assumptions, some basic equipment assumptions that you're running on basic equipment that's, viable, right? Minimally viable equipment. And I was estimating that your earnings are $10 per month. I think that's what I did. Did I do $10 a month or did I do less? No, I did $10 a month because I think I did. Oh, no. I did 10 cents per node per day, not even $1. So this is even a lower estimate. So my estimates are even lower than the Hypercycle team's estimates by about a third. So those were some of my loose, sloppy estimates. You got to start somewhere. So based on that, after each of these splits, that's what the token would be valued at if you just destroyed the license and unmarried. Yeah, I think you're right, Catherine. I think that's what it was. I think we did 10 cents. So think about it like this. This is the way to look at this chart. You're like, wait, I don't understand a token price. In order for you to make what you're making with the licenses married to the tokens, that would have to be the token price. Meaning, after 3 splits, each one of those tokens would have to be, each one of your hypercycle tokens would have to be priced at $2.18 or more for it to be worth unwinding the license and exiting. Does that make sense? Because otherwise your income from participating in the internet of AI is going to be higher than that. So, and also it's perpetual and you're getting paid and it scales up. So every six, I would say 18 technically. So every 6 to 18 months, whether or not the price of the token is 1 penny doesn't matter. You're earning the same revenue as if the token was this, So 6 months, assuming you have good uptime, everything's great. Let's just imagine at 6 months what could be done. 6 months, 47-cent token, basically where we're at right now, 50 cents, let's call it. 6 more months, it'd have to be a $1 token. 6 more months, a $2 token. Stop calling me with your sales calls. I have no interest in your sales, in purchasing what you got to sell. 6 more months, $1. 6 more months, 218. 6 more months. We're only 2.5 years now, man. 446. Start counting up your tokens, multiplying them times 446, because that's the actual that's the value that's embodied in that. Whether or not the token is 3 cents or not, it doesn't matter. So if you know so anytime the tokens are less or equal to this price, it makes no sense to unwind the license. Are you seeing what I'm saying? These tokens, this is a one-way gate. It's not sensible. I mean, some people would do it, but it's not sensible to unwind a license and pull your tokens out if they're making more than the value of the tokens. Like your melt value, you take like a Rolex. Okay, a Rolex is like $10,000 and it's a solid gold Rolex. Yeah, but like the gears and the metal and all the crap and the clasp, that some of it's gold, but not all of it. The glass is not gold, obviously. So if you melt a Rolex and it's got 3 ounces of gold, okay, $6,000 worth of gold, but it's a $25,000 Rolex. You lost money, man. So the melt value of these licenses, it would be, let's say after 4 splits, $4.46. Let's call it $4.50 per token. Well, if the price is $2, but you're getting paid equivalent to $4.46 a token, why on earth would you split it? I mean, why would you unmarry? Does that make sense? So then you think, okay, wait. So once this goes live, and again, it's not live right now, but once it goes live, well, tilling is live and compute is live in these training environments. But for all of you, once all of you are doing compute, those of you that choose to participate, 4 splits, $4, 5 splits, 6 splits, 7 splits, 8, 9. At 10 splits, this could be as short as 60 months. That's a lease on a car, man. That's a financing deal. You probably want to lease for shorter term. But after 10 splits, the token would have to be $291 to be worth melting out, dissolving the relationship and selling the tokens. And I can tell you this, there's no universe short of hyperinflation where the hypercycle token is worth $291. However, there will be a big fat market for selling these licenses in production. Now, I don't know. I'm not sure why someone would, especially if you're some of the beginners, but there may be a point where some of you want to just you want to exit. I don't know. You want to buy a Cloud City. You're like, I've always wanted a Cloud City. Now I can do it. I'll buy my own Cloud City. All right, great. But you wouldn't unmarry the tokens and unwind the license. You would just sell the entire thing. That'll be available at Node Market, by the way. You'll be able to buy, sell, and trade these licenses right through here. Not through the exchange, but through the market. Okay? Very easy. So, and that's cool. So you'll be able to do all sorts of really cool stuff, and you'll be able to manage from here your entire business. You'll be able to manage it. So, yeah, man, that's what's going on. I think 35. Yeah, probably. God, those things are expensive as crap. I think all that I have left after I had a gold one that got stolen. I think I ordered and And I don't wear those watches. I only wear Apple Watch, but I just want to have one just in case. But I just ordered a stainless one, not a gold one. I'm not that kind of jerk. So yeah. How much will our income reduce if we do not own the compute power and are just pointing our licenses to someone else's compute power? Well, you'll be getting a fixed percentage. So you'll get a percentage. So let's say you have the tokens and the license. I think that you'll get a third. You'll get a third of that. Does that make sense? But as the efficacy of those, and also here's the thing, let's say you point those tokens for a period of 24 months. And then at the end, there's been a couple of splits potentially. I mean, on good compute equipment, 24 months. How many sixes is that? That's 4 sixes. That could be 4 splits. So then you're thinking, okay, so 4 splits. So this company's is the melt value of those tokens. The token has to be over $2.18. Sorry, over $4.46. So the company that you're doing business with, they're not going to want to give that away. They don't want, because otherwise they're going to have to unwind. They're going to have to give you your node license and your married node license and your bundle of assets. They're going to have to give you that back. You think they want to give that back? No, my friend. And that's where the renegotiations kick in. And my guess is the renegotiations is where you get paid, fool, because then you're going to look and say, well, we've split 4 times. So I don't think 32% is enough. I want 55%. Oh man. But still, you can take your gear and go somewhere else. You can take your ball and go home. So, consider all of these things as you move forward. There's a lot to this. Also, it's not a get rich quick scheme. You're participating in the internet of AI. Do you want to know, interestingly, the company that at first made more people millionaires than any other company was Home Depot. They were giving everyone, because they couldn't compensate everyone with cash enough, so they were giving everyone stock options. And that first group of, I don't know, the first 3 or 4 years worth of people that were in Home Depot, just even like managers on the floor and assistant managers and weekend managers and all that, they all got made millionaires because the stock went from 0 to like superstar. So, there's lots of ways this can work out because you're simply early. And remember that early is, you can be really good. You can, if you want to be honest, you can be really good at something. You can be really lucky. You could cheat, or you can just be first. And it's a lot easier to just be first. And being first means doing research and kind of thinking these things through. So when you think these things through, it seems pretty obvious that there's going to be a point where this token just goes pretty much straight up, because it will be beyond anemic, where you cannot. Then what happens is you're just waiting for the tokens to be released into circulation through their programmatic releases, and hope that they hit the market, and hope that people just aren't hoovering them up and saying, F you, I'm just going to marry them to licenses. I think there's going to be there could be a whole business for farming, in the sense of growing licenses through tilling, where you run them on minimal equipment and you just grow it, sell it. People that just node license farmers that just run the licenses, get good quality uptime and tilling, and then the whole idea is that they intend to just flip the licenses to somebody else. That way, you're not really worried about the compute so much. Also, remember that compute prices are going to come down. There's going to be all sorts of ways you could spin up virtual instances. I know that they're working on that right now with a company where they have a lot of compute availability, and many hundreds of thousands of nodes that are out there that do all sorts of different tasks. They have physical nodes, like devices. And the idea would be that potentially hypercycle software would be deployed to all of those devices that are already that are already existing. And that people could just choose, if they wanted to kind of opt in, and that the hypercycle software would leverage part of the GPU that's not really being leveraged that much. And there's like a neural processor too, which may or may not be, probably would be at some point important as well. So it's essentially like this company's already built this existing kind of network of people that own their physical nodes, which are little compute devices, and that Hypercycle could leverage that. So there's a whole other rollout of people and compute that could open up space for a lot of people that are like, where am I going to throw my stuff and all that? So yeah, I mean, there's just a lot going on there. And they have now like 15 joint ventures. And the Hyper Ring is coming. That's going to be super cool. So yeah, there's just a lot going on. So all of these things, they start to, factor in to the way that you do the math. And this is why, today's conversation, we're going to have a conversation, gambling versus investing, and how those are two different mindsets. And they're two different they're dangerous. It's dangerous in that we talked a little bit about it, but where there's a lot of this meme coin behavior, this, I got to get paid right now. I got to be rich right now. I'm going to gamble it all. Again, I'll use that kind of story of, the crypto nerd guy or whatever that, he'd been in the market since 2017. This is somebody who should have had some kind of damn intelligence, or at least some accumulated knowledge. Or, I mean, Jesus, man, you saw Bitcoin go up and then go all the way down, then go back up and all the way down and up again. You've seen, he's in his third bull market after two pretty, thoroughly depressing. I mean, I guess it depends on how you look at it. I didn't really get depressed, but whatever. But for a lot of people, pretty depressing bear markets in crypto. And he stayed around for all that, only to gamble it away on 3x leverage Pepe like a dumbass. So he went from being worth 1.1 million overnight to be zero, like effing zero. So, and you think, can it happen that quick? Yes, it can happen that quick if you're a dummy, if you take on leverage. I don't feel sorry for people like that, not at all, because it's that kind of like, I deserve, I'm entitled, I'm owed, the universe owes me mentality. I want all those people to get wiped out. No one deserves anything. There's no such thing as deserve. That's not like some, minimalist theory and particle physics. Oh, the deserve function. What's the deserve function of this investment? No, you don't deserve anything. No one deserves anything. You don't just show up. It's not a damn government cheese line. I don't even know if they have those. Yeah, I know. Howdy-ho. No, that's the other one. It's funny. Which was, I think Poopy Butthole was making fun of the South Park thing. Anyway. How y'all doing, Cal? Anyway. So I guess I would just say that when you guys are doing, when you're looking at these investments, not just in the crypto space, any of your investments, get as much of the emotional part of it out and quit thinking that anyone, including the universe, owes you anything. What they owe you is somewhat of a level playing field to compete. You're competing intellectually with the people that you're investing against, which is why game theory makes so much obvious sense. It's like beyond obvious. Not really. If it was obvious, everyone would study this stuff. No one studies this stuff. It's like 6 people you're going to ever meet game theory. They're going to be like, does that have to do with video games? Yes, man. God. And I'm in one right now. And you're an NPC. And I just want you to not exist in this game. But let's keep going. All right. Let me find a couple more questions. Then we're going to talk about gambling versus investing and how it's very dangerous. It's very dangerous to go towards the gambling mindset. It's very tough to come back, because then you start making mistakes. Then you try to get it back. You're like, oh, it's also like in those movies where there's the bank robbers. They're like, just one more score. There's never just one more score. There's always one more job they take. Always. And that's the one that everything breaks apart. Everyone gets shot, and that's it. Maybe one guy escapes, but it's usually like a little snarky, funny character. You're like, oh, that's cute. Anyway, let's see. Have you any income from the dummy team when they will do? Oh, no. Intel. No, the dummy team, the ASI merge team. No, I don't know what they're going to do. I don't know what the timeline is. They don't know what they're going to do. They don't know what the timeline is. This is all backwards, paper, goofy, poor math, poor thought. Like, this is just a really, I'm not going to say it's an ill, I really don't know how to frame it. It's just a very poor quality merger with a lot of really weird legal questions. I just don't know how any of this makes much sense. It seems like a cash grab. It just seems like a cash grab. And yeah, so I don't know what their timeline is, but I know that as a general rule, I want to be as liquid with those tokens as possible when that conversion occurs. That's all I really know. So we're on bated breath as we wait for them to make their decisions. But I mean, anytime you have a company that announces all these big things, and then they're like, oh, and later on, we're going to do all the papers that talk about this. We're going to write this all up in a way that you're like, whoa, wait. You just release a toy into the wild and tell people, hey, listen, we're going to have the instructions ready for you here in a few months. You're like, so that glowing ball that my kid has that's radioactive, you're going to give me the instructions on it here in a couple months when you get around to it? Yeah. Okay, cool. You guys remember Happy Fun Ball? Do not taunt Happy Fun Ball. Do you think Singularity DAO and NewNet are worth keeping? I don't know, man. I don't want to make investment type things. I'll put it this way. I'm not buying either one of those. Singularity DAO is not worth keeping. That's not investment advice. That's just my gut feeling is like, what does it do? Everybody ask yourself, what does the token actually do? And mostly the answer is, put money in someone's pocket that's not me. Are we going to be able to comparatively shop Hypercycle compute resources? Yes. Yeah, you'll be able to do that. And you'll be able to see also at Node Market when there is a node license for sale that's in production, you'll be able to see its uptime, its processing. You'll be able to see everything in real time. And eventually there's going to be a place where you can compare and contrast like, oh, if I put my license here, what would it earn? If I put my license here, what would it earn? You'll be able to do all that kind of cool stuff. We'll have earning calculators and all that. But again, it's like slowly rolling out. First thing is make the marriage easy, make the transition from tokens and licenses separate to married easy, make the transition to some level of compute easier. Yeah. Okay. That's not really what the point of the ring is. The ring in its first instance, in its first kind of this MVP version, from what I understand, the ring, it's NFC chips. So near field communication chips that would allow you to use it as like a 2FA device. You could probably use it as like a backup to transactions, a backup to MetaMask transactions, like, oh, without tapping your ring to the phone, the transaction won't go through, things like that, all sorts of cool stuff. Potentially linking it up with a profile in your car, online banking, this and that. So there's all sorts of cool things there that you could do. Like I have PayPal. Most people don't, but I have my PayPal account hooked to 2FA on a separate device, so that no one can get a hold of my phone and just start doing PayPal transactions, moving money back and forth. I have to get my other phone to do it. I don't use PayPal very much, and so that for me feels like some good safety. Yay. So this is that. I think of it as a really cool 2FA device for now. Doing compute on the ring is not super likely, because the hardware is not going to be that robust. I mean, again, imagine a ring. How much compute, how much liveness and uptime are you going to get out of the ring that's not actually physically touching anything? I don't know. I don't know how good, but this is the right now. We don't know what the future of technology looks like, and up to some limits, and that there are some limits, some clear kind of particle physics, quantum borderline mechanical limits to what you can do in a small space with current kind of technology. Like chip sizes are 3 nanometers or something. Like pretty soon we've gotten to the end of the curve of how small you can scale things with our current chip architectures and technologies. So that's going to have to go in a different direction, because there's a point where you can't get smaller. Like you can't be smaller than the Planck length. I mean, we're nowhere near that, to 10 to the negative 24th or something like that. But we're not there. We're not there yet. I think, what is there, like 10 to the 17th particles in the universe? Like there's all, so I guess what I would say is probably not anytime soon, Steve. Okay. If I don't see any more super cool questions, then we're going to jump over and we're going to talk about gambling and investing. Okay, wait. We'll do lightning round. Do you think ADA still has a chance at a decent increase? I think everything's going to have a decent increase, because I think the market's going to go into a much more bullish phase. I don't think we're in a bull market. Again, just a real quick look is that 2.2 trillion is not 3 trillion. I don't personally think that we're in a bull market until 3 trillion. So if we're not at 3 trillion, in my mind, we're not in a bull market. If we're not in a bull market, then we shouldn't expect bull market outcomes. So what does a bull market probably look like for Cardano? That's the question you have to ask yourself. I don't know as far as a dollar figure. I just think there's going to be a melt up, generally speaking, for everything. But no one knows the timeline. And so I think sooner than later. I think months, not years. I don't think weeks. I think months. I think we have to get through the ETF, the Ethereum ETF, onto the pumping of the layer twos, onto the pumping of AI and big data. That's the way I see it playing out. And then in the macro picture, you obviously have to factor that in. Okay, for the DI community, where can we see office hours replays? They are they're there in the dashboard. They are or should be there. Yes. And if not, definitely complain to Brandon with all caps. Okay, so let's do this. BitBoy. Yeah, exactly. Freaking Ben. God, what a douche. Throw up a different screen. I threw up a different screen, buddy. Okay. Let's do this. Let's I know. How is that guy not in prison? I don't understand. These guys all get arrested and how are they not all gone? How are they not all gone? Okay. So we're going to switch gears. Let's talk about the mindset of gambling and investing. Listen, remember, the point of office hours is so that you guys think about the way that you structure your thoughts, the way that you structure your investment ideas. It's not to buy this or sell that. It's that you just end up being a marginally better thinker. Even if all you do is think about the way that you think, even if you make no adjustment, that in itself, that observer, that collapses all of the quantum, the wave theory. It collapses it to a single point in time, right? So like all of your available choices and just thinking about the way you think, observing the way that you structure your own thoughts, collapses all of the possibilities to a more structured approach to thinking, more pragmatic, more game theoretical, understanding your cognitive biases. And that's going to make you win more. We talked about it Tuesday, this kind of idea of a sum over histories of making, like the compounded interest effect of better decision making, even if it seems marginal. And then you melt above your peers, your competition, and you look and see all of the effort that they're not doing. If you do the effort, you'll win. I mean, that's it. You'll accidentally win. That's kind of that's the cool point. That's the deserves. You want to deserve, you want to be owed, you want to expect to do better. Just rewire your thinking. If you're a better thinker, if you're a more strategic, pragmatic, critical thinker, your outcomes are going to be better. There you go. I deserve better outcomes. Okay, think better. Think about thinking.
Hello. You're late.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
Okay. So let's give this idea. Boy, this one took me a while. You know, this image, it's cool. You can do a lot of cool stuff, by the way. GPT-4 now, you can just circle an area in the picture and then edit certain parts of it. And I wanted to show this kind of dichotomy between the casino gambling kind of mentality, and look at all these degens over here on the left. And then, you know, people actually, you know, like doing research and things like that, and, you know, numbers and stuff. And those are kind of numbers in the background. It's kind of some future alien number thing. But the hardest part was getting the word casino spelled right. It took me like 4 edits. Anyway, maybe that's good. Maybe the fact that it can't even spell casino means that you should not be at a casino. But today we want to let's dive into the risks of confusing gambling with investing. And I know that a lot of you are seeing this. I mean, you're probably seeing it all over the place. And so I want everyone to write, there's 212 people here. Gambling is not investing. Let's see it. Gambling is not investing. It's not. Why is it over to the left? Don't you think it should be more centered? Let me see if I do this. I don't know if I like that. This one? Nah. This one? Nah. I don't know. I don't know, man. That's not bad. It's whatever. It is what it is. Okay. Gambling is not investing. This should be your mantra. Matter of fact, this is probably the way you answer most of your family members. Hey, what should gambling is not investing. Yeah, but I want to invest. Well, you don't know about investing. You don't know anything about crypto. So guess what, Grandma? You're gambling. Get out of my face. I will take another serving of those mashed potatoes, though. Thank you. All right. So today, let's talk about a pretty important topic, which affects not only the world of finance, but our personal decision-making skills. Because all of this bleeds over. It's not just about your investing. It all bleeds over into all of your decision-making. So the idea is the dangers of confusing gambling behavior with actual investment philosophy, especially in the context of cryptocurrency, which most of us live in this world. So the discussion is critical because it helps you understand the importance of research and a longer term perspective. Remember, there's finite goals, slow, quick right now goals. And then there's longer term infinite goals. In game theory, you want to have an infinite mindset. Many games, many rewards over time, right? So let's kind of define. Gambling involves risking money on events, we could even say currency units, but again, money, anything that extinguishes debt, on events with uncertain outcomes in hopes of winning additional money, right? It relies mostly on chance. Often the odds are stacked against the gambler. As we've seen, look at the Bitcoin price over the last few days. You want to see a bunch of people getting beat up. Even though on the aggregate, the price is way down, the price went down and up just enough to wipe out so many leveraged traders, even people that were short. They got destroyed. People that went long got destroyed. So if there's any gaming of the system, it's to completely obliterate gamblers. They are punishing your average D-bag that's just punting money into the markets. They are punishing them. And it's every time you see the price spike up, say $1,000 or $1,500, many tens or hundreds of millions of people just got wiped out. And then of course, people come right back in on the other side and the price goes down $1,500 and they get wiped out. It's like sad and laughable. The fact that anybody's doing this, it's just beyond stupid, but it's a gambling mentality, right? And so investing, by contrast, is the act of allocating resources, usually money, currency units, with the expectation of generating an income or profit due to the research that you've done. Unlike gambling, investing isn't about luck. It's about using the knowledge, what knowledge we have, research, analysis, and game theory to make decisions that have a higher probability of return over the long term, using as much information, as much data as possible. Remember the commodity of data. So yes, there is the lure of quick money. And of course you see these ads. Some guy in Botswana turns $700 into 4.6 million. Yeah, of illiquid meme coin crap that he can't cash out. He still lives in Botswana and he has like hyenas for pets. Quit it. Just quit it. But in the recent years, it seems like, especially with the rise of cryptocurrency, a lot of people have been drawn into what they think is investing, but which is, it's either borders on gambling or it's just straight gambling. Meme coins, gambling. You're not investing in meme coins. You don't have anything. It's gambling. And the way we look at meme coins is the way that the traditional legacy system looks at the entire cryptocurrency space. They're gambling. It's just straight gambling. We're definitely speculating. You got to be intellectually honest about that. But it's not gambling in the traditional sense. Cryptocurrencies can be obviously incredibly volatile, and a person, you might hear stories of these people, overnight gains, and it tempts you to jump into the spamminess, to the gambliness, right? And then what happens? What do you do? Oh, well, I'm just going to gamble with some of my money. Okay, so you're just going to defer good decision making some of the time. How's that going to work out? If you, I mean, I could have all sorts of analogies and metaphors that get really perverse, but you can't just do things a little bit, right? Like you can't get someone a little bit pregnant. They're pregnant or they're not pregnant. Gambling is like that. So this idea of jumping in for a quick win, a quick hit, and jumping back out, that's a gambling mindset. The closest we get to gambling is understanding that some of the things that we thought were investments are actually lottery tickets where there's really no intrinsic value. And you know what? We probably shouldn't be investing in them, but we're investing in the stupidity of other people. What would dummies do? And you even have to be honest about that. That is kind of to an extent gambling, which is why I'm not a big fan of it. Once an investment becomes a lottery ticket, I'm not a big fan of it. Unless you have a clear cut, very, very, very direct path in your mind of how other people are going to behave, which that's tricky. Gambling's gambling. So yes, there's this thrill of making quick money, but it tends to cloud your judgment, and it leads to decisions that are based not on research, but on the hope of a lucky break. This is where I'm due comes in. I'm due. Look, I've lost all these things. I'm due. No, you're not due. You're not due anything. Again, there's no deserve function in the universe. It's not like, part of these particle wave equations is the I am deserving function, the entitlement function. And just tape that over all of your formulas and that just answers it. Oh, okay. Winning. And there are dangers of the gambling mindset because what they do is usher in a bunch of cognitive biases that you start to reprogram yourself in the bad way, right? Like when you approach investing with a gambler's mindset, not only do these cognitive biases like overconfidence, gambler's fallacy, obviously gambler's fallacy, confirmation bias, not only do they start to come into play, but you start to, especially if you have one or two wins. So like you get overconfident. You think, you might believe I actually can control these outcomes, even though they're determined by chance. You think, I got a winning hand or something. You're like, no, man, that's not how it works. You have the gambler's fallacy, which is after a series of losses, you think that you're due for a win, which leads you to invest more than you would. And that is bad. And then you have confirmation bias. You're seeking out information that supports your hope of quick profits, and you ignore warnings. You ignore broader data. You ignore the obvious, and you tend to ignore math and fundamentals. And so gambling behavior sets you on a very risky path, and it's not sustainable. You think they keep building casinos because they routinely lose to people going into the casinos? Who do you think the winners are? So it is not sustainable, and it leads to significant financial losses. It leads to a bunch of really just bad personal behavior. I mean, gambling is an addiction. It's psychological addiction, and it's pretty bad. And it typically leaves people unable to invest properly to meet their financial goals. That's not likely to happen because, again, you'll just crypto nerd it. It'll all be gone tomorrow, all gone. I know somebody that a few years ago, before the 2021 bull run started, they bought Bitcoin, and Bitcoin went from like 13,000 up to like 30, I think around 35,000. They started borrowing against their Bitcoin to buy more Bitcoin. And I said to him, I don't think that's smart, man. I don't think you should borrow because that just doubles or increases very dramatically. You're taking on this leverage. So if there's a retracement, which we just got through 2017, so we know what those look like, you're going to get wiped out. And he got his account up to about $1 million. And you want to guess what? He got wiped out. Wiped out. Gone. Millionaire, no more. It is what it is. And it's just repeated. You see this over and over. Jerry and I used to talk about it when we did a show, like, leverage is there's a lot of people taking leverage. When I started getting letters from emails from Nexo saying, hey, do you want to take leverage on your assets? You have this many assets. I was like, I'm out. I shut my account down. I sold all the Nexo tokens. I got out. I was like, I'm out. This is bad. So the gambling behavior is a risky path. It's not sustainable. It leads to significant financial losses. It's emotional, a lot of emotional detriment. It becomes like this weird kind of addiction, just the behavior in general. And you think, oh man, well, what else can I do? Well, you just stop. You're like, I remember this comedian was like, you want to learn how to quit smoking? Quit smoking. That's right. Yeah, just quit smoking, right? So the benefits on the other side of like a research-oriented, game theoretical, long-term investment philosophy, kind of obvious, right? So your long-term approach based on knowledge and research, this is where you try to develop an understanding of what you're investing in, know your assets, understand the macro market conditions, because yes, as we've seen the last few weeks, they are important. All things are correlated, one in a catastrophe or any kind of chaos environment. Start looking at, as best you can, the business models of the companies. Try to create some structure of fundamentals, especially for cryptocurrency. Do your 5 T's. Risk management, where you look at your portfolio and diversify inside that portfolio to spread risk in the different kind of sectors that you see in the market based on, again, your risk tolerance, your appetite for volatility, and the areas you think are going to expand into the path of progress. Use stop loss orders when you can. Use limit orders always. I mean, just like basic stuff, basic risk management stuff. Dollar cost averaging, right? Don't just throw all your money in. That's right. Like, pick an amount of money, spread it out over the month, put it on an odd number of days so that you have this weird frequency of investing that's not every Tuesday. You want to be able to take out any kind of weird patterns that might exist in your investing. The pattern should be, you take the money and you invest it over time. That's the pattern. The frequency of investment needs to be probably on an odd number of days that's different than the days of the week. So not 7, you might do 5. I choose 5. Every 5 days, I do some dollar cost average investing in the basket of assets that I think are quality, right? Okay. And then have some patience. Long-term investors tend to understand that value accumulates over time. We talked about compounding interest, even of decision making, but compounding interest in general is how people get wealthy. Anybody with 100K can be a millionaire in 21 years. Anyone with 100K can be a millionaire in 21 years. I know that's a long time, but just that's anyone. That's just through basic compounded interest effects of like 7 and change percent. The same thing that a pension fund has to do, which they don't really do. So if you can beat that, you're doing great. If you can beat Fed funds, you're doing great. If you can beat government debt, you're doing great. If you can beat basic crap investing, you're doing great. So this is the space where most of that opportunity lies. So don't add, don't take an opportunity and squander it. Don't take an opportunity like the crypto space where there is still big returns to be made and squander it, right? Have a disciplined approach and resist the impulse to react to these kind of short-term market fluctuations and just stay disciplined. It reduces risk. It gives you more informed decisions. It increases your chances of a steady return. It decreases your emotional attachment to investments. And just remember, there's real life consequences, right? If you invest in things that you do not understand, attracted just because of rapid price increases, like we've seen these people that got into Bitcoin just recently through these ETFs. Oh yeah, sweet. I'm in Bitcoin now. No, you're not. You're in an ETF. You're not in Bitcoin. They're in Bitcoin. You're in nothing. All right. But I'm in Bitcoin now because the numbers, it's going to be awesome. They bought in somewhere between, probably where all this started, the mid 30s, all the way up to 73 and change, back to 59, back to 57. There's people that just don't understand what they own. They're going to panic their way out. They too are gambling, right? So they bought high, maybe they sell low, maybe they buy back again high, always doing it the wrong way, handing their money to veterans. That's not investing. That's gambling. Swayed by the potential for fast money without really understanding and acknowledging the risks. So you can't gamble a little. You can't I'm just going to people. Oh, how many people here have said, I'm just going to Vegas, but I just gamble to have fun. I'm just doing it to have fun. You can have just as much fun watching other people gamble. You realize that. You're not gambling just to have fun. That's stupid. That's you not being honest with yourself. When I hear that, I just, because my parents live in Vegas. I go and visit, I'm just gambling, just to keep it interesting. Well, oh, really? Lighting money on fire is interesting, huh? Why don't you give me the money? Then we'll just call it interesting. Oh, I had dinner with Nick and I gave him money. Why? Just to keep it interesting. Doesn't that sound stupid? I mean, it doesn't sound stupid for me. It sounds great for me, but that's stupid. Oh, I just paid Nick $8,000 at dinner. Why? Keep it interesting. Just to keep it fun. That's stupid. Again, I'll accept, but it's still stupid. So to wrap it, it's pretty crucial to recognize and challenge those gambling impulses that you can have, this deserve function, this entitlement function, and just endeavor to steer clear of it. As many of you may be just starting out on your investment kind of path, and you want to make sound decisions, and you want to create a disciplined, research-based approach to investing, not only just in life, but in finance in general. And it leads to more sustainable success and financial security. Again, you're trying to be a competent fiduciary when many others aren't. So there we go. Gambling to the left, investing to the right, although look at all those stuffy people. I don't see anyone wearing a tie though. That's good. If you're wearing a tie, it means you work for someone else. If you don't wear a tie, maybe you've broken free. I don't know. Anyway, stay in school, don't do drugs, don't do anything my poor insolvent drunk, strung out on meth grandmother or Brandon wouldn't do. As you know, I I don't know what the temperature is there. I feel like there's still snow on the ground, but he's probably wearing a long sleeve shirt today. He just that's why he's not on. He's doing a long sleeve shirt. That's what I assume. Anyway, we'll see you tomorrow.
Do you trust your crypto assets to centralized exchanges that actively sell your private information and front run your trades? Would you like to buy and sell your assets without any middlemen, intermediaries, or robots? Do you like paying slippage, fees, and having the price go up as bots steal from you on low liquidity decentralized exchanges? The solution is nodemarket.io. Set your guaranteed buy or sell price. No middlemen, no slippage, no bots, ever. Buy or sell 1, 10, or even 10 million tokens, and you never have to worry. OTC trades are between you and the seller or buyer, guaranteed by audited smart contracts and no human middlemen. Nodemarket.io.